Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, March 10th, 5:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state downgraded to moderate correction, which means we're between 8 and 12% off of the highs in the S&P 500. Check the trend gauge over here. Red arrow for market leaders. Leadership is basically non-existent. Also red arrows for our short-term 21-day exponential moving average and medium-term 50-day moving average. Major indexes trending below that level. Long-term, hanging on to the green arrow on long term, going to go neutral, possibly red over the next few days if we get another close on the S&P 500 below the 200-day moving average. The Dow, the only one of the indexes, it closed basically right on the 200-day moving average. So what happened today? Over the weekend, Trump, various interviews made it clear he's not really concerned about supporting the market. Lots of comments out of the administration about some short-term pain, and the market agreeing, selling off, broad selling, taking the S&P 500 below the 200-day moving average on a closing basis. It undercut and reclaimed a few times last week. Bounce into the close on Friday, set up some optimism for today, but as soon as the futures opened, Sunday night we gapped down, got worse overnight, and then even worse as the session went along. Here are the numbers. 2121 still under construction. There really are no leaders. I will show 60 charts later. We, from our internal discussions as a team, things we're watching, things that had held up above the 21. Quite a few of them broke today. A few of them above the 21 we would have no interest in owning anyway, but we will take a look at some charts. The big eight hammered, down an average of 5.35%. Tesla taking it the worst, down 15%. The RG8s, our 8 growth ETF composite, really helped get us out of the way as soon as stocks topped the week ending 221. All eight down again today, led to the downside by ARC, down 8.8%. S&P 500 after the gap down of 1.5% at the open. 5.5 hour trend down period today before a bounce in the last 30 minutes. Closed down 2.7%. Equal weight S&P down 1.4%. We'll take a look at the rest of the indexes when we get to the charts. Global 60/40 down 1.44%. Our flagship GROTECTION portfolio down 0.82% and now less than 1% away on a portfolio basis from getting stopped on everything and taking us to net flat. Let's get to the charts. Here's the S&P 500. Oversold, can get more oversold, and this is what you're seeing in action. Friday's undercut and reclaim of the 200-day moving average. A lot of chatter over the weekend that was the bottom, not even close. We did bounce off the lows today as well as oversold became even more oversold, but solidly below the 200-day moving average now by 2.1%. I mentioned in our video on in the podcast on Friday that we're watching for a 3% close or more close below there based on some research that we've done and other research I've seen some other people do that that's kind of a line in the sand. If you get below that level, odds are you're going to go. Well, let's just say that the bear markets happen if over the 2 weeks after you first pierce the 200-day moving average, you get 3+% drawdown from that level. So that's what we're keeping an eye on. NASDAQ 100 also rallied on Friday right into the near flat 200-day moving average. Gap down 1.7% at the open. Weak bounce after 3 o'clock, down 3.9% on the day. Dow Jones Industrial Average holding on to the 200-day moving average. Equal weight S&P 500 continues to show big relative strength, but it too is below the 200-day moving average now. Mid caps further below the 200-day, continuing to underperform. and small cap Russell 2000. Further lows right above this 2000 level, and now back to the lows of last June. Let's go to the VIX. Big pop today above that 27 level that we spoke about. That sometimes that's a one standard deviation from the long-term average, which is around 19.5. And when we got above that level today, we did pull back a bit, and that did coincide with a little bit of a bounce on the indexes. But very clearly, we need to see some follow through. U.S. dollar, some of these things really not being as important as they were before with the market in all out sell mode, but a little bit of a bounce on the dollar. Gold down, sitting right on the 21-day moving average, down 0.9%. Gold stocks sitting right on the 21-day moving average. Bitcoin really continues to come apart here, breaking the new lows of the range near the top of the base, gave up the whole move from this flat base breakout, nearly the whole move. Did bounce at the 200-day moving average today, however. Let's go to bonds. The broad bond index BND bounced. Fear trade money flowing into bonds. This brings yields down a little bit. TLT also with a bounce by 1%. TYX, the 30-year yield pulling back after a 4-day bounce into the declining 21-day moving average, and TNX, the 10-year, after a 4-day bounce pulling back as well. That's our inner asset correlation. Let's go to the tail of the tape. Moderate correction, as I mentioned. Fear and greed at a 15 now. That's extreme fear. Some news this week. We got CPI Wednesday, PPI Thursday, and then next Wednesday, the FOMC meets. And as of right now, there's 95% chance of no interest rate cut, although we now have more than a 50% chance of 3 cuts priced in by the end of the year. Keys coming into today, S&P against the overhead 150-day and 200-day moving averages, broke the 200-day. NASDAQ 100 against the same level, further declines against the 200-day. Day count, 1 down, 8 of the last 12 down, 12 days below the 8 EMA, 12 days below the 21 EMA. Our expectations remain negative as long as we're below the 21-day moving average on the S&P and NASDAQ 100. S&P 500 average true range has spiked now to 1.38%. We prefer to have this below a 1, and this syncs with the increased volatility from the VIX. Sectors today, energy and utilities, the only two up. Staples barely down out of the big 11 spider sectors. 9 of 11 down, led to the downside by banks, semiconductors, and software. Portfolio standpoint, trimmed a little bit of SPLG on the rebreak of the 200-day moving average. This puts our adjusted beta at 0.26. The only thing we own are SPLG and gold. Anything else that various clients may have or transferred in with is hedged where possible. Otherwise, we're tracking the beta for some possible hedges on those. 0.54% is our rebar. That's Revere estimated balance at risk. That would be so with a 25 beta, if we would go down another 2.5% on the S&P 500, basically we'd get stopped out. Bottom line on the day, broad selling came back into the market after a reprieve and a bounce Friday afternoon. S&P 500 closing below the 200-day moving average. Keys for tomorrow, we're watching the S&P against that overhead 200-day moving average. Same thing on the NASDAQ 100. And keep an eye on the S&P 500 percent of stocks against their 5-day moving average. I'm going to bring this chart in. And as bad as the market is, only 43% of the stocks are still above in the S&P 500, still above their 5-day moving average. This seems high, and again, it's everything rotating out of growth names but into value names. If those value names, we saw this a little bit last week, if those also get sold off and we get on around the 10 level with this, that could indicate the possibility of a short-term bounce. So we're keeping an eye on that level as well. That's the percent of S&P 500 stocks versus their 5-day moving average. I said we'd have some charts. Let's get to those charts and we'll take a look at all 60. And I'm just going to go through this very quickly and you can see what has happened with them. Lemonade showing, oh, excuse me, minor relative strength, but back below the 21 and 50-day moving average today. OKTA gapped up last week right into the top of the base, pulled back, not completely breaking down, but no further progress. No further progress is actually a win in this type of market. SE, one of the stronger stocks, earnings gap up 3 days down and breaking the 21. AbbVie, drug stock, money flowing into this, decent growth numbers, continuing to make higher highs. ASTS bounced at the 21-day moving average, very wide average true range on this stock, down 13% and still above the 21-day moving average. BJ's move higher on earnings last Thursday, followed up on Friday, minimal give back today. Deere, again, a defensive name. It's above the 21-day moving average, but resistance at the 500 level. Here's the European ETF that we're keeping an eye on for a possible entry as foreign stocks have been outperforming the S&P 500. Futu, strong China name, breaking below the 21-day moving average. GDX closing right on the 21. Hayweb pulling back today after a failed breakout above a cup and handle last week. Light and Wonder bouncing at the 21. A Rocket, they had an acquisition today. That's why the volume was so high. And relative strength gave way on that, closing below the 21. Raytheon, still hanging above the 21-day moving average. Uber broke the 21 today. Viva Systems, gap up on earnings last week, still in a base, but not giving much of it back. Vertex, big strength. Biotech with earnings and a reasonable PE right around that 500 level above the 21. WGS, biotech breaking the 21. Zscaler, after a gap up and close at the bottom of the range last week on earnings, breaking the low of the gap day. Axum Therapeutics breaking the 21. Unity Software breaking the 21 and the 50. AEM undercut and reclaimed of the 21-day moving average. Amgen, money flowing into this. Biotech with a 16 PE. Money managers, mutual funds that have to stay fully allocated to the market. They just look for these lower PE, lower PEG ratio names as growth names continue to get blown out. Alibaba pulling back still above the 21. Berkshire Hathaway bounced at the 21 today. CME Group, higher high, all-time high. I don't know if it's an all-time high or not. No, well, maybe close to an all-time high. Excuse me. Showing definite relative strength. IBM, undercut and reclaim of the 21 on Friday. Again, another spot for managers, fund managers to hide out in. ICE bouncing at the 21. JD.com breaking the 21 after a failed breakout on earnings last week. Lee Auto sitting on the 21. Progressive Insurance showing some relative strength, not making much progress to the upside. Philip Morris, buoyed by their nicotine Zyn product, sitting on the 21 EMA. Royalty Pharma bounced at actually closed right below the 21 today. Republic Services, pollution control, and waste management above the 21. T-Mobile bounced at the 21 last week. TradeWeb, relative strength new high, still above the 21. Xpeng, for China automaker, earnings next week, near highs. TGTX, definite relative strength here. One of the best looking charts, period. They've got good growth numbers and following through on the breakout from a flat base last week. This is like the needle in a haystack type thing. Yum China, still in a flat base. Nice relative strength there. Darden Restaurants, continuing to show relative strength, holding the 21. Cheniere below the 21 and the 50, but showing relative strength. MP, this is MP Materials. They're a rare earth mining, showing relative strength. Nutanix given up all of the move and then some from its gap up on earnings last week. Same thing with Take Two from its gap up a couple weeks ago. Doximity also given up its earnings gap from about a month ago. GE gave up the 21, now hanging right around the 50-day moving average. Howmet breaking the 21 and the 50. INOD breaking the 21 and the 50. Lilly, man, this is the piano player. They came and got it 3 brutal days down after making close to reclaiming new highs. Penumbra breaking down below the 50, Ferrari breaking down below the 50 and the 200. Starbucks relative strength only lasts so long in this is a 34 PE, so really not that cheap. Really selling off over the last 6 days. Paychecks, this is a way for companies to cut costs with outsourcing. That making a new high. American Water, uh, obviously, don't have to tell you how critical water infrastructure is, but back-to-back nice days and some big blue bars on this one. Visa holding up above the 50-day, but MasterCard broke the 50-day. Chevron showing relative strength over the last 3 days into this 160 level. Northrop Grumman joining the defense party, clearing moving averages, but still in a base. Checkpoint pulling back, more relative strength, but not really making any progress. And SanDisk, former stock, I believe it was bought up and spun back off a few weeks ago. Pretty decent IPO looking base right there. And those are 60 names that are of interest. The names like App, the names like Snow, the names like Bros, Palantir, those have all fallen by the wayside. Those are broken leaders now, and we're sitting patiently waiting for a much better market opportunity. Could be next week, could be next month, could be longer. Um, We'll stick to our rules and hope you're benefiting from the analysis we provide every night. As always, like to hear from the emails Don at revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. Email my partner Dan Stewart, Dan at revereasset.com if you're interested in becoming a client. Our flagship portfolio named GROTECTION. We discuss it every night here on these videos designed to grow markets during uptrends, get out of the way during downtrends. And this downtrend, every 20% drop starts as a 5% drop, then 7, then 9. Right now, we're between 8 and 12% off the highs in the S&P 500, about the same with our GROTECTION portfolio off the highs. And really, what the bottom line is with Revere, you do not experience these. This is what our mission is, to avoid these catastrophic bear markets, especially if you're approaching retirement. Can't afford to get caught in one of these and give up your nest egg. And if you know somebody or you still have money with a pie chart advisor with no sell discipline, please reach out to us before you give back all the gains that were made over the last, let's see, 14, 15, 16 months before we started to waver and weakness came into the market. And with that, I'll wrap it for Monday, March 10th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.